$3,716. That's the kind of amount many hardworking people send back home through Western Union or similar services every single month. Think about someone like Rajesh, a 58-year-old green card holder who has lived in the United States since 2014. He manages a Dunkin' Donuts franchise, often working long 12-hour shifts, and for 9 years, he sent around $2,800 every month, like clockwork, to support his aging mother and his younger brother's family back home. He never missed a single payment until 1 month in early 2026, when his bank account was temporarily frozen during a routine review. It wasn't because of anything illegal. His income came from the franchise he co-owns with his wife, plus some rental income from a small property, and everything was properly reported on his taxes. After several weeks and some legal expenses, the matter was cleared up completely. But the experience taught him how important it is to understand the current rules about sending money abroad in 2026. Stories like this happen more often than people realize, not because people are doing anything wrong, but because the financial rules have become more detailed over time. Many immigrants and green card holders work hard in restaurants, driving, construction, retail, or small businesses. They pay their taxes and simply want to support their families overseas for things like medical care, education, housing, or daily needs. The goal today is to walk you through the key rules in a clear and practical way, so you can make informed choices that fit your situation. I'm going to cover the main reporting requirements, recent changes like the new Remittance Tax, data sharing between agencies, and most importantly, 5 practical steps you can take to send money safely and compliantly. By the end of this video, you will have straightforward information that helps you avoid common problems, save money where possible, and support your loved ones with more confidence and peace of mind. Let's start with something almost everyone has heard about, the $10,000 threshold. Under the Bank Secrecy Act from 1970, banks, credit unions, Western Union, MoneyGram, and other money service businesses are required to file a currency transaction report, or CTR, with FinCEN whenever a customer does a cash transaction of $10,000 or more in one business day. This covers deposits, withdrawals, exchanges, or transfers. The report goes automatically to the Financial Crimes Enforcement Network, which is part of the U.S. Treasury Department. This system has been in place for decades to help track large cash movements as part of broader efforts against money laundering, fraud, and other illegal activities. It is not designed to target ordinary working people, but it does create a record that gets reviewed when patterns stand out. A lot of people misunderstand this rule. They think that as long as they stay just under $10,000, everything is completely safe and no one will notice. But intentionally breaking up a larger amount into smaller transactions to avoid the reporting requirement is called structuring, and it is a federal crime under Title 31 of the United States Code, Section 5324. The penalties can include significant fines and, in serious cases, prison time. Banks and agents are trained to watch for patterns, such as multiple deposits just below the limit on the same day or over a short period, or using different locations to keep amounts small. If they see something that looks like structuring, they can file a suspicious activity report, known as a SAR, even if each transaction is smaller. The important thing is to keep your finances straightforward and consistent with your legitimate income from your job or business. Consistency and clear records usually help everything go more smoothly. For people sending money home regularly, there is another layer to be aware of. In late November 2025, FinCEN issued an alert specifically about cross-border funds transfers. The alert reminds money service businesses to file a SAR for transactions of $2,000 or more if they have reason to suspect the funds come from unlawful activity. This is not an automatic report on every single $2,000 transfer. It depends on whether there are specific red flags present, such as frequent round number transfers that don't seem to match the person's stated job, using many different locations in a short time, or incomplete paperwork. Ordinary lawful immigrants and green card holders who send consistent amounts from documented income like wages, overtime, or rental property are generally not the main focus, But it's still wise to understand these guidelines so you don't accidentally raise questions through avoidable patterns. The connection between these reports and other government agencies is also worth knowing. SRs and other financial data can be shared with various law enforcement bodies under existing laws like the USA Patriot Act when there are legitimate reasons. This includes Homeland Security investigations and ICE in appropriate cases tied to specific investigations. Additionally, in April 2025, the IRS and ICE signed a Memorandum of Understanding for Limited Data Sharing. This agreement allows requests for taxpayer information mainly in situations involving final removal orders or certain criminal immigration matters. There have been court cases and public discussion about the exact scope and privacy protections under Section 6103 of the Internal Revenue Code. Some information sharing has been challenged or limited by judges. The main takeaway for most people is that filing taxes correctly remains important for proving lawful income and maintaining good standing. Always work with a qualified tax professional if you have both tax and immigration questions, so you can handle everything properly and avoid mistakes that could create future complications. Another major change that started in 2026 is the new 1% excise tax on certain remittance transfers. This comes from the One Big Beautiful Bill Act, signed in 2025. The tax applies when you send money abroad using cash, money orders, cashier's checks, or similar physical instruments at places like Western Union or MoneyGram. It does not apply if you fund the transfer electronically from a U.S. bank account or with a U.S.-issued debit or credit card. The sender is responsible for the tax, and the provider usually collects it at the time of the transfer. For example, sending $2,000 in cash could add $20 in federal tax on top of the regular service fees. Over a year, that adds up to $240 extra, and over 10 years, it becomes a significant amount that could have been used for family needs instead. This is why many people are now looking for ways to use bank-linked transfers when possible. It helps reduce costs and creates a clearer financial trail that benefits everyone in the long run. This tax affects millions of families across the country. In recent years, immigrants in the United States sent over $90 billion in remittances annually to support relatives abroad. The Congressional Budget Office estimated that this 1% tax on cash-based transfers could raise substantial revenue for the government over the next decade. But for individual families, especially those without easy bank access or those new to the system, it creates an extra burden. If you don't have proper documents to open a bank account yet, or if banks have tightened rules in some areas, you may end up paying this tax more often. That's one reason why building a formal banking relationship when you are eligible can save money and reduce complications in the long run. Many banks now offer accounts with ITINs or green cards, and starting with basic checking and savings can open up better options for you and your family. There are also geographic targeting orders in certain areas, particularly near the U.S.-Mexico border. These orders can require money service businesses in specific zip codes to monitor transactions at lower thresholds and file more detailed reports. If you live in Texas, Arizona, New Mexico, or parts of California, your local transfers might face extra attention simply because of the region. This is part of broader efforts to address money laundering risks in high-traffic areas. Again, the best protection is using legitimate, documented sources of funds, keeping transactions consistent with your income, and maintaining good records. Now, I want to walk you through 5 practical steps that can help almost anyone sending money home in 2026. These are not shortcuts or tricks. They are straightforward ways to stay compliant and reduce unnecessary reviews while still being able to support your family effectively. The first step is to use electronic transfers from a verified U.S. bank account as much as possible. When you link your transfer to a bank account that has your name, address, and income history from direct deposits, it generally creates a clearer record. Electronic transfers from bank accounts are usually exempt from the 1% remittance tax. They also tend to have lower scrutiny scores because the money source is traceable through statements and payroll. If you currently don't have a bank account, Take time to check what documentation you need. Many banks accept green cards, ITINs, passports, or other valid IDs. Start small with a basic checking account, deposit your paychecks regularly, and build a positive history. Over time, this can make sending money much smoother and cheaper. Plus, having a bank account helps you build credit history, which can be useful for future loans, housing, or other financial goals. Step 2 is to completely avoid structuring your transactions. This means don't split a larger amount into several smaller ones on the same day or over a few days, just to stay under reporting limits. Don't use multiple stores in one day or ask different family members to send parts of the money. These patterns are exactly what monitoring systems look for. Even if your money is completely legitimate, it can trigger extra reviews that freeze accounts temporarily and cause stress for you and your family. It's always better to send what you need in one clear transaction that matches your normal income and habits. Plan your transfers based on your actual earnings and budget, so everything stays predictable and easy to document. Step 3 is to keep excellent records of your income and transfers. Save your pay stubs, W-2 forms, 1099s if you do freelance or gig work, bank statements, rental agreements if you have property income, and your tax returns. Organize them in a folder on your phone, computer, or a physical file so you can find them quickly if ever needed. Take photos of important documents and back them up. If anyone ever asks where the money came from, good documentation shows you earned it legally through your job, business, or other reported sources. This is your strongest protection. Many people who faced questions were able to resolve them quickly and without major issues because they could prove everything was reported and legitimate. Step 4 is to file your taxes properly and on time every year. I know this can feel complicated, especially if you use an ITIN instead of a social security number or if you have income from multiple sources. But filing accurately helps establish your income history and lawful presence. It also gives you a paper trail that proves you are following the rules. Because of data sharing agreements, it's even more important to get it right. Find a tax preparer or enrolled agent who understands the needs of immigrants and green card holders. They can help you claim credits and deductions you qualify for, avoid mistakes, and handle everything correctly. Not filing or filing late can lead to penalties, interest, and difficulties with future immigration steps or financial opportunities. Good tax habits also help you understand your full financial picture so you can budget better for remittances. Step 5 is to consider practical banking options like a joint account with a trusted spouse or family member who has full documentation. Many banks allow joint accounts where one person has a social security number and established history. This can make electronic transfers smoother and help avoid cash-based taxes and higher fees. Of course, only do this with someone you completely trust and make sure both parties understand the responsibilities involved. This step isn't for everyone, but when it fits your situation, it provides real advantages in cost savings and simplicity. Let me give you some real-world examples so you can see the difference clearly. Imagine an undocumented worker without a bank account sending $2,000 every month in cash. Each transfer might cost the 1% tax, that's $20, plus Western Union fees of $10 to $15 or more, depending on the location and promotion. Over 12 months, the tax alone is $240, plus all the service fees. Now compare that to a green card holder with a Chase or Wells Fargo account, sending the same $2,000 electronically. No 1% tax, often lower fees, and a much cleaner record because the bank already knows the source of the funds from regular payroll deposits. The second person saves money every month and has less risk of account holds or extra questions. Over a few years, the savings can be hundreds or even thousands of dollars, not to mention the peace of mind for your family. Many communities also rely on informal transfer systems like Hawala, Hundi, or other trusted networks. While these have been used for generations and can sometimes be fast and low cost, the legal reality in the United States is clear. Operating or using unlicensed money transmitters can violate federal laws. Penalties can be serious, especially if there is any connection to other issues. The formal banking system may cost a bit more in some cases, but it gives you official receipts, tracking numbers, and legal protection. Staying within regulated channels with proper records is much safer for long-term peace of mind. It's also helpful to think about the bigger picture. The United States receives a huge volume of remittances from its immigrant communities. These funds support education, healthcare, housing, and small businesses for millions of families abroad. At the same time, the government has strengthened monitoring to prevent misuse of the financial system. The balance means that ordinary people need to be more careful and informed, understanding the $10,000 CTR rule, the guidance around $2,000 transactions in certain cases, the 1% cash remittance tax, and the importance of bank accounts can save you time, money, and worry. Take small steps each month. Open that bank account, organize your papers, plan your transfers, and you will see improvements. Over time, these habits also help you build stronger financial stability for yourself and the next generation. If your situation is more complicated, maybe you have mixed immigration status in the family, rental income, self-employment, or multiple jobs. Consider speaking with an immigration attorney or enrolled agent who specializes in these overlaps. They can give personalized advice that fits your exact circumstances. Free or low-cost resources are sometimes available through community organizations, legal aid clinics, or senior support groups, especially for green card holders and long-term residents. In summary, the financial landscape for sending money home has more rules in 2026 than it did a few years ago. The $10,000 reporting threshold is still important, but the practical focus for many people is on the 1% tax for cash transfers, avoiding structuring, keeping strong records, filing taxes correctly, and using bank channels when possible. These steps protect your ability to support your family without unnecessary interruptions. Rajesh eventually got his accounts back and continues sending money, but he now uses more electronic options and keeps better records. Many others have done the same and report smoother experiences month after month. If this video gave you useful, practical information you didn't have before, please give it a thumbs up and subscribe to the Senior Wellness Hub channel. We focus on real topics that affect immigrant families, seniors, and working people every week, always with clear explanations and helpful advice. Drop a comment below and tell me about your situation. Are you sending money through Western Union with cash? Have you tried bank transfers or apps? Do you have questions about the new tax, opening an account, or keeping records? I read the comments and try to reply with helpful guidance where I can. Next week, we have another important topic lined up for travelers and families. Until then, take care of yourself and your loved ones. Stay informed, keep working hard, and continue supporting your family the best way you can. Thank you for watching, and I'll see you in the next video.